Here's the truth. Most people never shop around after their first policy. Insurance companies know this. They count on it. Your rate probably hasn't been competitive in years. But here's the good news. Fixing this takes about an hour of real work, and it could save you $600 or more annually. In this video, I'm walking you through exactly what I do every year to keep my premiums down. Let's get started. Before you shop, you need to know what insurers will see. Go to your state's DMV website right now and order a certified copy of your driving record. This costs $5 to $10 and takes about a week. Why? Because insurers check it, and sometimes there are errors. I once found an accident on mine that wasn't even mine. Getting it corrected saved me $200 a year. Don't skip this step. Pull out your current insurance card and policy documents. Write down your coverage limits: liability, deductible, collision, comprehensive. Also note any add-ons like roadside assistance. Why? Because when you get quotes from other insurers, you need to compare apples to apples. Same coverage, different prices. That's what we're hunting for. 5 minutes of paperwork saves you hours of confusion later. This is where the real savings happen. Go to Geico, State Farm, Progressive, USAA, if you're military eligible, and at least one regional player in your state. Get quotes for identical coverage from each. Most take 15 minutes online. I did this last month and found a 15% difference between the cheapest and most expensive quote. That's not a typo. 15% for the exact same coverage. Spend an hour here, pocket hundreds. Every insurer rewards you for bundling. Car plus home, car plus renters, whatever you have. I saved another $120 a year just by moving my renter's insurance to the same company as my auto. Some insurers offer 15 to 25% bundle discounts. If you own a home, that discount stacks. Ask each quote provider exactly what the bundle discount is before you commit. It's money left on the table if you don't. Most people have a $500 deductible because they don't think about it. Bump it to $1,000 or even $1,500 if you have an emergency fund. The premium difference is dramatic. I'm talking $50 to $80 a month cheaper just for increasing the deductible. The math works unless you crash constantly. And if you're shopping for insurance in 2026, you probably don't. This one move alone might be your biggest saving. This is where people lose serious money. Ask every insurer about low mileage discounts, good driver discounts, safety feature discounts. Your car might have collision avoidance tech that qualifies. Some offer discounts for bundling accounts online. Others discount if you don't have an accident in 3 years. Military, students, engineers. Some have affinity discounts through employers. Spend 10 minutes calling and asking. One of these could be worth $200 or $300 annually. If your car is older or paid off, collision and comprehensive might not make financial sense. The payout cap versus your deductible might mean you're wasting money. Run the math. If your car is worth $3,000 and your collision deductible is $1,000, is collision worth $50 a month? Probably not. But if you're financing, your lender requires it. Read your loan agreement. Your insurance company doesn't determine what you need. The contract does. Companies like Lemonade, Root, and Direct Line are built on software, not overhead. They don't have agents or brick offices. That cost savings sometimes passes to you as lower premiums. I switched to one 2 years ago and haven't looked back. They're not right for everyone. Some people want to talk to a human, but if you don't, you might find your cheapest quote here. Test them in your quote round. They're often competitive on price. Don't set and forget. Rates change, companies adjust their pricing, you get new discounts. I shop every single year. Most people don't. That's why they overpay. Set a calendar reminder for the same month next year. Spend an hour. Maybe save another few hundred. It's one of the highest return activities you can do. And that, honestly, is how you keep your car insurance cheap in 2026 and beyond.